following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Dow's up 72 at 20,244. S&P's up 5, so the Dow 30 stocks are stronger than the 500. Don't usually like that. So the S&P's at 2313. The comp index, that's the very broad composite, NASDAQ composite, up 12 at 5727. VIX is down at 10.77. This is very interesting. We'll talk about that in a moment. The E-mini is up 525 in leg D. And now I'm going to go through, I went through this with Tom earlier on, and Tommy, I'll do it. I subbed for a little while with because Tom was coming back from the money show, I believe it was. So let's go through a couple of things here. In the E-mini, we've got a very quick A to B to C to D in the weekly chart. All the key indices are lined up now. You've got the Dow. Well, I'll show you in a moment. The Dow, the S&P, the QQQ, now you've got the New York Stock Exchange. You just did it this morning. It needed 10 points. It's actually up 20-something. The MDY, the mid caps. So as far as I'm concerned, this is where at least a caution flag goes out. And we'll talk about the possibilities and what we'll be looking for. If I go to the Dow chart right here in the 120-minute chart, I had to move my Chapman Wave 5. We had no, we had no trough. Where was it? Over here, I had the 3 over there and a 4 there. And I kept thinking about it, saying, you know, that's unusual. You don't usually do that. Why? I did it because of the sharp pullback from the D. But then last night I said, no. I think we're going to go higher, and if we go higher, which is what we did intraday yesterday, that means that this could be the 5 in a leg F to the upside. F means that you've got to be cautious. There could be a recycle, a renaming of it, but not when the technicals are starting to fail, and we'll get to that because on the right side, it's the same chart, except this time I've just got Chapman Wave notation. Leg F with a question mark. It went to 20,262 in the Dow. But look at this pattern here, where you get the arch formation in the MACD's fast-moving average. That's technically the 9-period differential, and then it bounces up. So to my eye, I like to think of this as a continuation pattern because it didn't fail miserably here to make that a D with a down arrow. So that leaves you with a chance that this could have recycled, but I'm treating it right now as an F, and you've got to be cautionary. And what I said to subscribers, we have a particular way of playing this, that if the Dow does something, that's where we're going to start the short side. We did that yesterday with a very small short in the 1-to-1 short Dow. We took a small loss, 12-cent loss. I was quite prepared to take the 12-cent loss, a very small percentage. I just said, hey, it's worth it. It was kind of insurance. I might even want to do that again on Monday. I might even, we'll see what we do in the rest of the day. Now, let me show you what I'm also looking at. If you're looking at this chart here, now, once again, I've got, if I can find it, let me see if I can click on this one here, right there. No, I can't. So what we're looking at here is, this is the Dow with that expanding wedge formation, and now it's gone above it. When it breaks that pattern, and you see the distance between the 9-period moving average, the blue line, and the 20-period, that big, thick red line, still expanding, you just have to respect that there is enough buying, even though this is leg D, that you have to have the evidence. And the evidence would say to me, we would have to have a close below 20,000 to really say, you know what? This rectangle formation here, the cushion of the rectangle formation is going to be tested once again. And this cushion is really, it even looks like a trampoline, right? Price bounces down, it bounces up above it. Price bounces down, you make a higher low. So therefore you go to a higher high. And that's kind of what we've seen. So I don't actually want to get to the short side prematurely. And here's another thing. You see the way the MACD, the moving average, is expanding right there instead of deflecting lower? See the way the stochastic's at 85%? The day might be different, but I'm looking at it and I'm saying, so far, this is good action. Leg D is where we start to become a bit cautious. Normally, I would just slap on a short in D and maybe wait for a peak D to confirm it, or I'd wait for a peak D and then go short. I'm just going to step aside just for the moment, but I'll tell you why. My foot is coming off the accelerator and it's on the brake. And the reason being that within the context of the market, let me give the numbers, finish the numbers here. So the Dow is up 71, nice move away from that trend line, stopping right at this red dashed line in the weekly chart. We're getting into that Chapman Wave resistance, the Chapman Wave inside track repellent zone, leg E in the 120-minute chart. Just time to be a little bit careful here. Here's the other thing, S&P, SPX.X, S&P, leg D, gaps up, strong move, leg D in the weekly chart, middle chart, weekly, monthly chart of the down, the S&P are still fabulous. Go to the QQQ series. The QQQ series says leg E goes to the upside with the MACD still good, stochastic at 95%. On balance volume is a warning sign to say, be a little careful here, but it's only in leg C. I can't believe it, A and B, C. So the on balance volume is still strong. Leg D in the monthly chart in the resistance zone, hasn't shown any weakness yet. Leg C in the monthly. So as I'm doing this and as I'm saying to myself, I feel like I should be bearish. I keep looking at it and I say, there isn't anything bearish just yet. Now let's go to the key indicator that I think is important. This is a peak E in the SMHs, the semiconductor index. Now, it's a leg F. I could have made this a recycle 1, 2, 3. No, it didn't have an instant restart, although it could have had a new up move. But I'm looking at this and saying flat stochastic, flat MACD, where the MACD fast moving average is just barely above the slow. That's what I call a flat, and that maintains the last up or down arrow. In this case, is an up arrow, so that stays in place. Stochastics at 95% in the weekly. That's good. 86 in the daily. I have to see price movement to convince me, even though we're actually short from our subscribers. We have a stop just above the high. We shorted almost at the high. So I need to see a close below 74 by Tuesday or Wednesday of next week. Then I'm going to say, hey, now we can start to see a bit of a pullback in the market. So now let's go on to gold. What a nice comeback. Down 4. It was down much more before it hit a low this morning of 1222.6. Bouncing now. It's funny. I didn't mention too much about this in my stock market report, in my market report for my subscribers to my opening call. I did mention the other day, but I forgot to mention today. I've only got a peak C in the weekly, in the daily, and there's no other. I could count it a different way, and I didn't really want to get into it, which is what I call Chapman Wave unconventional restart, which says you're coming right back to the low that was made right there at 1182. And I said, I just don't see it right now. The MACD is still good, the stochastic's good. So I'll show you with the gold, the GDX, and the GL, the gold stocks themselves. They are kind of a little bit toppy, but holding very well. I'll talk about the dollar and gold when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's get to the gold and look at the dollar, because it's going to be very important this coming week. See the way the gold has had a very powerful stair-step move in a leg A to the upside. In other words, from the low that was made the week of the 16th of December at 11:27, each candle has been filled in very nicely and gone to successively higher peaks. And that keeps, this is what I call a floating ladder for those of you who are interested in Chapman Wave methodology. So that's A, that's A. That bar is A, that bar is A, that bar is A, and here we are, leg A again. If next week, if all of next week, gold doesn't break above 1246.60, actually above 12, if it double tops, it keeps A. In other words, if it hits 1246.60, that's still leg A. If it doesn't break above it, instead it doesn't even get close to it, that would be a peak A, and then 1204 is the 9-period exponential moving average. Now, here's the dilemma. I'm sure that many of you are in the same situation. For those of us who have gold, either the gold via GLD or something like that, or maybe the miners, as we have for my subscribers, or a gold stock, and they've done fantastically, 20, 30%, who knows? I mean, by the end of the day, it could be anywhere, but they've been fabulous. What do you do? Here I am saying, I could make an alternate count. I said I wouldn't go into it too deeply today. Let me get rid of this just for the moment. What I wanted to show you is that there's a technique that I developed a long time ago, which is the instant restart is where within 3 bars, preferably making higher highs and higher lows, you go from a D to a leg E. Then it goes E/A and then F/B, unless it's very decisively the alphabet letter just continuing. Okay. But if it does that, and then it suddenly pulls back and breaks the low, a key low, in this case it would be the low of the 13th in gold at 1190.2, and which it did, because it went to this low right here on the 27th. It went to 1182.4. Oh, 1182, that looks much lower. 1190.2, that's, I don't know what I said, 1190.2, and then it went to 1182.4. There's a technique that I have that says it'll keep going higher and keep coming back towards that level, the breakout level of the peak D of 1209.9 in this case. And at some point, it's going to make a D. It could even make an E, just be real choppy. But when it comes back down, it comes back really sharply, and it'll go close to the trough of D. That would be 1190.2. But most likely, it'll even get close to the low of, in this case, 1182.40. I'm looking at it a little differently. I'm saying the stochastic's holding well. The MACD is good. I'm going to call it C for now. Maybe we get one more pop to the upside next week. But at the same time, now let's go to the currencies and the dollar. And I'll show you something very interesting. So I just needed to clarify. The reason why I looked at the weekly MACD and the weekly candles is because the key each one got filled in nicely and made a higher high. Whereas if you look at the move that was started back in the week of the 7th of October, it went leg A, leg A, leg A, and then that fifth leg A plummeted. We've already had 1, 2, 3, 4, 5, 6, 7. This is the 8th week, and after 8 weeks, you can expect some kind of a pullback, right? That's just playing the odds, heads or tails. However, that doesn't make a guarantee because look, the MACD is improving in the weekly. Stochastic is not great, but it is rising at 37%. And that's the thing that says to me, you know what, I do expect that we will get some kind of a pullback. You also have an M pattern in the MACD. The second arch is usually the one that starts to dip down and cross negative. So I don't know yet how I'm going to count this. There could be an alternate count, A, B, C. This could be D/C. I don't want to make it complicated for those of you who don't know anything about Chapman Wave. Just to make it real simple, a close below 1220 on gold in the next 2-3 sessions says we've made some kind of a top. Now let's go to the GDX. I just want to show you GDX holding well, bouncing off the 9-period moving average. I mean, come on, 88% in the stochastic. MACD is good. Leg B, a little bit more advanced in the letter names, but look at the stochastic, 69% in the weekly, and the MACD's improving. So I like this, and I said to subscribers, we're just going to raise the stop. I don't want to take off anything. I said to swing traders 2 days ago, take something off. If you're just a swing trader, we want to hold. And gold stocks are doing the same. I mean, GG is a gold stock that, look at this. It could have recycled, so this is brand new A, B, C. This is the same thing. So yeah, you've got your G/C, and it's holding beautifully. I don't see any reason yet to get too excited. And leg B in the weekly, gold core trading at 16.90, up 0.07 after pulling back, hitting the 9-period moving average, bouncing off it. What a beautiful indicator that is, right? A tool. Now let's go to the dollar. You see, the dollar has moved up, but it hasn't decisively taken. This is what I was talking about all week. It needs, first of all, to take out 101.02. It needs to smash through it. Today's high is 101.01. Isn't that funny how these things work? It hasn't taken it out yet. Day's young, but that wasn't good enough. You remember what I said? I want that. And then the real issue is, how does it take out the high of the 19th of January? 101.73. If it decisively punches up, then the H pattern that I'm looking at is in play. And it says it could go a little high into the 101.70s, maybe 102.20s, and then we might get a pullback. But in the meantime, gold is acting a little bit independent. It's almost as if gold is in its own universe. The tide for gold is on the upside only because of the nervousness of internationally. It's a currency of fear. And two things are going on. It's a currency of fear, and the gold stocks, over the 10, 12 years that we've all been looking at gold so intently. Of course, I come from South Africa. I've been looking at it for a lot longer than that. In fact, as a teenager, I lived in a mining town, Brakpan, just on the Vaal Reef, just about 20 miles from Johannesburg. But I was born in Cape Town. I always have to add that, one of the most beautiful cities in the world. Okay, so what we're looking at here is gold at 100.87, up 22 cents. In the 120-minute chart, it's just walking the line EMA. But if gold actually breaks under 100.36 over the next 2 sessions, that's going to be important for 2 reasons. Because it will allow gold to push higher and show that it's got it is the The fear factor du jour, that's the way I have to look at it. There are two things going on. One is the gold stocks over the years that we've been looking at, when the gold stocks move better than gold, I find that that's a very good sign. And when gold moves better than the gold stocks, that's it doesn't have the same impetus. All right. Now, a couple of questions I had. While I'm looking at this, I want you to look at EUR USD. The euro-dollar currency pair, you see, this is still very weak. And it went to a single leg A up, but it did it only in 1, 2, 3, 4 bars. The fifth bar, look at that. There's the MACD in the weekly chart. It's good. Stochastic's only at 37%. And my fear has been that this H pattern, when you get the H pattern that goes to the lowercase m and then you close above the left side high, you want to power right through every resistance level, and the euro dollar has been unable to do that. We'll look at the Japanese dollar, Japanese yen when we get back. Basil Chapman, Tiger Conditions Hour, Dow's up 68, S&P's up 5.58. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just wanted to correct something. The dollar is actually leg C up. Thank you. We know wonderful viewers there in the den with comments, and one of my students does fabulous work. Said, hey, I think there's a leg C. You might have missed one. Yep, I did. I missed one. I did see it a couple of days ago and completely forgot about it. So, and one of the reasons is that I was asked a really good question by Chris from Chicago, whether it could be an instant restart to the downside. And I said, it could be, but I like the trough F, and I like the way that the MACD is turning around, and now it has turned up to the upside, so we can get rid of that yellow circle. Okay, so the euro dollar, let me just review that quickly. Did I just put in an I there in the euro dollar? Yep, it doesn't have an I. That's it. So this is a leg B to the downside. Unlike the dollar, this is B to the downside and not C. And what's really important about this is that it hasn't closed under it, but it went underneath this key bar, the bar of the 30th of January of 1.0619. And that says to me, oh, okay, keep in mind that when you close below an important low on the left side, then you have to be considering that the next target will be hit, and the next target would be the low of 1.058 from the 19th. Now, let me just move that away. There, got it. Okay, now what we want to do is to go to the USD JPY. USD JPY coming up, leg A, and kind of failing. So if this is the dollar is showing a little bit more strength, but it's matched the dollar beautifully. Look, I mean, peak C1, C2 in the weekly chart, single leg A up in the monthly. Let me just keep your eye on the three. Go 1, 2, 3, and I'm going to count to 3. 1, 2, 3. Now watch the dollar. Keep your eye on this. Here we go. You see that? The dollar's acted way, way better, but it does have the same pattern, certainly in the weekly and certainly in the daily. So I don't like to benchmark precisely like that, because it's at this point it's the action and reaction of the dollar, especially since the president has talked about a higher dollar, didn't like the higher dollar, and it is also it's very hard to explain. But when you're looking at the euro and the dollar, although the euro has a chunk of dollar within it, are massive volumes in trading. There are countries that trade there. It's not just like regular human beings, it's countries. So that's why it's very important. That's why trends tend to stay in place for months. That's why the uptrend was for so long. The whole of 14, 15, you kept going up, and then a good part, it's a year, over a year now that was going down, and then now we've had 6 months, 7 months. What is it? 1, 2, 3, 4, 5, 6, 7, 8. 8 months going up, even though it's getting choppy now. So you've got to be looking at currency. This is the euro I'm talking about. The dollar, Japanese yen I'm talking about. Currencies tend to trade in big swaths of momentum. That's why this downside is real simple. You got a left side, right side price time match. Look from there to the midpoint there to there. And all it says is that if the euro, I keep saying euro, the US dollar, Japanese yen, in other words, if the yen breaks down and closes under 111.58 was the low of the 7th of February, if at any point in the next week and a half, the euro takes out 111.50, you're looking at the 200-period moving average being hit. The MACD is attempting to turn up. The histogram, those little vertical lines, that's the distance between the two moving averages, is improving. It hasn't gone to a plus yet. The stochastic has made an arch formation with a double bottom, a somewhat positive divergence, and yet the price hasn't been able to break above this key high of the 27th of January at 115.36. So just keep that in mind. The currency at this point, the dollar has still internal weakness, as has the yen. But if the yen takes out 114.10, just has to close nicely above 113.85 anytime next week, we will be looking at gold finally having a digestive phase. All right? I'm trying to keep it simple. Gold above 1247. That's very positive action, and it makes the 200-period moving average of 1239 to the 9-period moving average of 1227 key support. Breaking below, I'd said before, breaking below about 1220 says, time out for gold. Okay, so we've gone through all those things. I had a couple of questions here. Let me just quickly look at my questions here. Someone had asked me about STM. Now that's an IBD stock that I had looked at about a week or so ago, which is very strong. Where can I put it? Yeah. It's something micro, some STM microelectronics. Yeah, it made just recently, it made a peak D, a double top right there at 14.44 in the daily. It's a peak D. If it doesn't make a new recovery high today, I don't see how it can go from 13.58 down 8 cents to 14.45 today. So this is going to be a peak D. This is the deepest correction it's had. Look at the red bars. This is the deepest correction it's had ever. Isn't that amazing? Not ever, but at least going back to, let me find it here, STM Electronics. Oh, way back to way back to that bar of the 5th of February, exactly 1 year ago, 2016. Isn't that, look how it's walked the 9-period moving average. Stochastic and RSI are turning down. On balance volume is turning down. I think it's in a corrective phase right now. I would not be buying it. Would I be shorting it? Just too strong to short. And a $13.60 stock. All I can say is that if it takes out that low of the 31st of January of 13.05, I'd be real careful, because then the 1230 9-period moving average of the weekly is in play. And if it just chops to the upside next week, closes over 14, it says you can put in a rectangle formation, and it's going to make a flag formation over a period of 2 weeks as it just consolidates sideways. Wow, what a beautiful looking stock. SLW, I had a question about. SLW, silver wheat, I didn't finish the chart. D. So you see, this is what I'm looking at here. This is a D. And within 3 bars, you get your Chapman Wave instant restart. Plop, plop, plus, plus. And now you can put in a yellow circle. And let's see if you can go A, B, C, D to the upside. A. So that would have been E/A. You don't know it's an instant restart. MACD turns down, stochastic turns down deeply, and yet the price holds. So this becomes F/B. I'm going to call it B for now. And then a C, and then it makes a D, a doji candle D. So, doji candle D, and I put it in an F. I didn't mean that. It's a D. So that means I can put a plus sign there, and that says be a little bit careful. You've got your D, the MACD is turning down, stochastic turning down, price is holding beautifully, and it's in a leg B to the upside. Silver wheaten trading at 22.34. Yes, it's acting very well. The weekly chart says if you can buy it back, if you get rid of a little bit right now because you've had a good gain, then the best way to think of it is you want to put that money back at it's at 22.33, between 21.20 and 20.90. You want to put that back. Maybe 5 or 6% lower. That's all. But otherwise, I'd be holding, I'd be raising my stuff. So I'll get to other questions when we get back. Basil Chapman, Tiger Technicians Hour. I'm looking below the show. Questions, Dow's up 60. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, we're back. So I had a question about KRE, which is SPIDER, S&P Regional Bank, monthly chart, leg B, huge move up, looks fantastic. The weekly chart has made a peak D. Remember, we're looking at all the different indices making Ds, just about every single one of them. However, when I'm looking at this, my eye immediately says, okay, mister, that was an instant restart. That D went to an E/E, then an F/B, then a G/C, and then a D. And you remember, all you need to do is you can have the alternate count, but until the shorter term gives you the signal to say, hey, going down or whatever it is, that's going to be important. Just keep in mind the 9-period moving average, the MACD, stochastic, these are all helping you. Now, what's really interesting here is my eye says immediately, aha, there it is. We've now got something very different. We've got the Chapman Wave stalk leg formation. This could become an arch formation, or it could break out. So I put that in, and I put it in, I don't even put leg, body, neck, or anything. I just put it in to say, hey, there's no commitment now, but that's a pattern that is unfolding. Slightly higher highs and slightly higher lows, slightly lower lows and slightly higher lows. Not a rectangle. There's no rectangle here. This is definitely an oval formation. And that says a breakout above says you can go above 56.99, but I'm going to have to call that E, and that's the neck. And then you've got to be careful at E and F that you're going to be pulling back. And what does it say? It says it'll pull back first to the breakout level of 56.99. But if it takes out the body after that of 53.48, watch out, because it could go much lower before it gives a very sharp buy signal. So that's the way I'm looking at KRE 55.90, down a penny. And I spent a lot of time on this. This has to be a peak D, and this has to be an up arrow because it broke to a new high. So this has to be a B. Now, I always show you the things that work. Every once in a while, there's just something that I cannot explain. I'm making a list of those. I want you to know when the Chapman Wave is fading completely. I've got, I don't want to take time, but I'll just do real quickly. KMX. I was doing CarMax. I always do it. I seem to lose the chart every once in a while. But CarMax, where did I say? The weekly, at some point, made a peak C minus, and there's no other way I can count it. Right there. It went to an alternate count, G, C minus. If I kept that C minus, I couldn't even really say C1, C2, because that right shoulder is way lower, even though the technicals were failing. So every once in a while, you'll get your C minus, but the C minus in the monthly chart, that was April of 2015, that was the same thing that happened in the monthly chart, and there's no way I can count this. You can't go E, F, G, H, there's no H. So that to me says I've got to put that down as one of the few times, especially at all-time highs, where there is no D, E, or F, or even a G. It's a C, and C failed because it went below the A, and that's a failure. I want to be able to show you that Not everything's foolproof. And also there's the human side of it where we try to interpret, and sometimes we interpret it. Eventually the waveform turns out to be right. We turn out to be wrong. This is one. There's no other way. If it did not break below 42.51 CarMax back in April, if it, instead of breaking below, it held that and then it went higher, the C would be in place, and then you'd get a potential for an overlapping wave. If there was a break above right here, any break above right there. So any move to the 70s would have been starting a new overlapping wave, leg D, that could have taken out that previous high. Just wanted to show you that it could fail. That's all. Now, I want to do a couple of other things. So CRE, all I'm looking at is KRE is, I'll give you parameters. This is where I have to say, you know what? The MACD and stochastic are not acting very well. If a MACD deflects low and at 50% the stochastic stays low, there's a real good chance you're going to make the arch formation. I'm going to make it real simple. At 55.87, Friday a week, if there is a close below 54.20, that's a negative sign that says you're probably going to take out that low of 53.48. And if it's held sideways, chop, 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 you could have an inside buy that goes peak A, B, C, and then maybe a D, and that will conclude the up move. Or if it breaks above 57.30, that's fantastic action. Just keep it as simple as that. Would I buy it? I can't do anything right now. I have to, if I bought it, I'd have to buy it at 55.86 and put in a 1.5 point stop. Make it as simple as that. At this point, I'd just step aside. I'd wait for early next week to make a decision. Next question is the FCX. Now, I didn't mention copper, and I should have. I had a great question coming in the den. Do I follow the gold-silver ratio and how it impacts stocks depending on which is leading? You know, I can't remember. We used to have in the den, we used to have someone years ago who, that's all he traded was the ratio. And when the ratio was positive for gold, he'd be buying the gold, I think it was, when it was positive for silver. He had a special way of doing it, and 6 months, a year could go by now. Then he'd pop in the den and say, oh, gold-silver ratio, and then he'd get into his position. No, I do not follow it. I should actually read up to refresh myself because I used to know a little bit about it. I don't know how. I can't remember how it works. I can guess how it works, but that's just guessing. And also, I can't remember the reaction of stocks. Now, FCX has made a peak F/C. Everything about this suggests that the 9-period moving average in the weekly at 15.21 and it's trading at 16.02 is holding very well. The monthly chart has really improved. It's in a leg C. The MACD and stochastic are very strong as they are in the daily. All I can say is that Freeport McMoran trading at 16.02. This is a nice looking consolidation so far. If it takes out the low of 15.15 that was made on the night yesterday, then I'm going to say to you, you know what? Not good action at all. And I have to give it an alternate count. I should have put that in. I try not to be. I try not to have alternate counts because anybody can say it could go up, it could go down, but this says put it in a G/C. And the MACD and stochastic, if they hold well, says it could be a pop to a leg D, and then you've got to be somewhat careful. And the parameters are very easy. A push over 1689 immediately says you could tackle 17.07 for a leg D. So I don't know what the question is in terms of wave count, only to say that it's in a G/C sideways consolidation. We've seen this in so many things. Look at the IWM, made a peak C1, C2, C3, C4. And my big question is this. You see, there's that channel, and then it broke out of the channel. And this is good action on the part of the IWM. That's the reason why I said to my subscribers this morning, I'm looking at this and saying there's a chance that usually in the first quarter, I'll get back to FCX. Let me finish FCX. So FCX is acting very well. High-grade copper broke out, and FCX is not acting proportionally. It's not acting as well as it should. It is a copper stock, and high-grade copper has broken out. It's in leg, I would have to say, it looks more like a B. I'm going to put F/B. Yeah, I have to do that because it's just broken out. It hasn't even closed on the day. But it looks to me like this is a brand new leg B in the weekly chart. If that's the case, this is a bullish thing for the stock market if copper is acting so well. Leg C in the monthly. Well, the monthly isn't even halfway through, so I can't talk about the monthly other than to say right now it's looking very good. So all I'm going to say is that FCX, it's not, it gapped up. Yeah, it's up 66 cents, up 4-point-something%, but it's coming back down. If FCX can close any day, can get above 16.78, I would say to you that's very good action. And so far, it's not bad action. It should be holding the highs, not the lows of the gap up there. I'll be right back for the final segment before the weekend. So.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So I'm looking at the JJC, which is the Bloomberg iPath Copper ETF. And I've got this in leg C, and the weekly chart, I've got F/B. Everything about it says just a continuation. I'm just calling it an F for now. It could still go to a G, but it's at the 9-period moving average, 200-period moving average, and it actually pushed a tad above it. If it closes above it, that's a good sign. And the monthly chart is in leg C. I'm thinking copper's telling us a good story about the economies of the world. This is nice. I like it. So answer is that's what I'm looking at. So the XLI was the next question. XLI was, it needs a leg D. All right, so the XLI, which is the S&P Industrial Spider ETF, needs to go above 64.85. Just another 85, another 18 cents, 19 cents, 19 cents. and it's already up 43 cents on the day. So that would go to, and then it's a leg C. You see, not everything works out. There's always, in the stock market, there's always something that says, but wait a minute, what if? Anyway, at this point, everything looks good. Well, I only want to start my shorting of the indices at this point when I get the confirmation on the downside. I think that there's going to be a rotation through the different sectors. And I'm looking at, I have for subscribers, we've kind of rotated into sectors. We'll see if it works out. It's hard to tell because we need the whole of next week to see if they gain traction to the upside. But in the meantime, back at the Rosh, let me just do this. The VIX index should always be a clue. In the below 13s is good. Below 11s at 10.66 is good for the market. Bad for the VIX index, very good for the market. And that's what I'm looking at right now, 10.66. There's going to be a reversal. It better happen very soon. And the VIX needs to be not down 22 cents. It needs to be unchanged or slightly higher, with the Dow suddenly taking an emotional dive that follows through on Monday. And that says that the Dow has to give up at 70 points and close up maybe 20 or down 20. S&P has to reverse plus 16 to minus 2. And then all of a sudden, I've got all the ingredients that says, okay, maybe now we can be looking at next week as not the consolidation week, but the week that the market starts pulling back and the test of the sectors that might be able to hold strength. I have to just tell you, look, I'd hate to do this, but it's the only thing that's right in front of me now. We have a stock. We're long a portion of the stock, not a full position. It's NG, which is Nova Gold. I said to subscribers, let's just raise the stop. I don't want to get out of it. If we had a full position, I would have said 2 days ago, take off a part of it and keep the core. I want to keep the core, and I raise the stop on the other half. And the reason being, I want to see where it closes at 4 o'clock today. Look at this, goes under the 200-period move, the 9-period moving average, and rebounds, and it's up 12 cents when the dollar is up. Something is going on in the gold sector that is more than just technical. There is buying pressure that is saying we're buying because under normal conditions, we would say gold, dollar rallies, gold should be pulling back. And something is saying to me that there's an outlook out there, and heavy buyers are coming in to say, you know what, this is such this is a time with so many moments of apprehension that suddenly occur that gold might be the play. It's, in fact, at this point, I think it is back to being a fear factor. And we'll see. When that fear factor is ameliorated, I wonder what that's going to be. When that fear factor is ameliorated, we'll start to see gold really take a dive. But at this point, I really think it has. I'm not sure where else it could be coming from. It's coming from really big buyers. I mean, that pullback was momentary. And look at this. Gold is now just down a dollar. I must say, let's keep it in mind, folks. Have a great weekend. Check out my opening call. I hope you will find it as intriguing and beneficial to your portfolio, as many subscribers seem to think. And we'll be back on Monday. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TF TFNN.